Hello and welcome to the November monthly look back, which means we're going to look back on some of the trades running into October. Now, the purpose of these look backs is principally educational, so we can consolidate some of the things that the full set of CDs have taught us and we can see real life trading examples. So what I want to start off with Corus Group this month, as you can see there, Corus Group, is the example of a bearish divergence, which, as I've mentioned before, is one of my most popular, most favourite positions. Now imagine we get up to a stage where this is what we see on screen. So we see the price tracking along. And one of the big criticisms many people have is, well, you know, it's all very well spotting these positions in hindsight, but what about with foresight? Well, of course, that's exactly what we're trying to do. So imagine this is where we're at. This is the point where we see this type of position. And what can we see? Well, we see several things. First of all, we see a nice, solid upward trend. There's no doubt about that. We see the price moving higher and higher. When we look at the MACD, what do we see? Well, we see a peak and we see a lower peak. There's no doubt about it. We're not talking about hindsight. We are talking about foresight. We can see a lower peak, yet with the share price, it hasn't confirmed that. As you'll remember from the charting CDs, and if you don't recall, have a look at the charting CD again, but as you should recall from the charting CD, what this means is we've got a bearish setup. In other words, a higher high on the price, a lower low. Fair enough. Well, okay, fine. That looks promising as a trade entry. Where might I want to get in? Well, you can see with the MACD, it's already started to move lower. The stochastic has definitely confirmed that. We're still on the upward trend, so we might be a little bit worried that we're going against the trend. We might want to ease into the position if it makes a new low the next day. So it closed at 53.25, so 53.25, and if it moves any lower the next day, we might want to short Corus, whether it's a spread bet, a CFD trade, or whatever on that. But we would equally want to bear in mind that we need to put in a tight stop loss, and a stop loss for something like this might be, well, not only a stop loss but a target level. Stop loss may be that when we look at this we might say, well, it shouldn't go above 55 pence, and certainly not above the recent high of 55.5, otherwise we know we are wrong. So if we're getting in at 53.25 and we're getting out at, say, 55.25, well, that's a 2p stop loss. So can we at least set a target of 51.25, which would be somewhere along here? Well, we should, at least in all reasonableness, be able to expect something like that to the downside. But because we've got a bearish divergence here, we might be able to say, well, you know what, I actually expect this upward trend maybe to have broken down and it to go even lower. Now, one of the things we'd do is we'd look at the news flow. We'd look at the news specifically on Corus, but generally a broader market. We'd also look at the weekly chart on this to see if we are willing to take that short side, downside bet and downside move, maybe setting an initial target of a low of around 48.25, maybe a further, and that's where we might look to exit half the position, and possibly even lower at 43.75. We will only exit if it makes a 1 or 2 day high. Once that has occurred, we'd certainly be expecting it to break beneath this trend line. Now, to cut a long story short, let's not just for the moment look at the weekly chart. Let's just continue and see what happens if we move ever so slightly forward a little bit at a time. What does happen? Well, if we move 1 day forward, we certainly see the prices move lower, so we were fine there, and we're still short. We see the MACD nicely moving lower, and the stochastic moving lower. Remember, this is not 2020 hindsight. We looked at the position as it looked. We didn't sneak ahead. We looked at it how it looked earlier on. Fine, let's move 1 more day forward. Great, we've broken below our target profit. Well, our initial risk reward was 51.25. Make sure it could get to that. It certainly could. It's also, we noticed, broken beneath that upward trend line, so we're very happy about that because it means we are most definitely short. Now, we obviously still don't have the stop loss at around here, 55.25, because we've now got the stock moving a lot lower. And we might say, well, I'll exit at a 2-day high. So if the price should move above the high here, 53.75, or even a 1-day high, you'll get out of maybe half the position here and the other half if it goes above that point. So don't get too happy just because the price is here. We haven't made money until we've actually exited. Where are we now? Well, we're quite close to this level here, so we could expect some kind of resistance from the price moving any lower. We look at the Bollinger Band and we think, well, Bollinger Bands tend to act as support levels, and I'll mention a bit more about Bollingers later. They tend to be support, so maybe I want to be targeting about 48 anyway. Given the strength of the MACD moving lower, certainly remaining short. Now what happens? Well, the price does indeed touch the Bollinger Band. It bounces off a bit, goes to 50. Worrying thing, we've had an up day. Although the MACD is still moving lower, the stochastic is starting to move a bit higher. Might be getting a little bit worried that we're seeing a bit of support. We're seeing the price having already hit down here. Now, if you're very risk averse, you may well get out at this point. You'll think to yourself, well, look, I've had my share of excitement. I want to get out either all my position or half my position. For those who remain bearish because they've looked at the weekly charts, they've looked at the news flow on Corus, they've looked at broader markets, they might say, well, I want to stay in. So, if we're still remaining short on this, where does it take us? Good news the next day. We see the Bollingers creating a bit of room for the stock to move lower. The MACD still forcibly lower. Yes, I know the stochastics moved higher, but we know that if the MACD is falling sharply like it is there, we'll let that rule the roost. And we still see the price, certainly thankfully, not having made a 2-day high. And that's good news. So we remain more bearish than we were the previous day. Great news again, hasn't broken the previous day's high. So that looks bearish to us, and it looks like the market does want to go a bit lower. The next day, ooh, terrible. It's gone a bit higher. This is not fantastic for us. And again, if we were worried that 50 is the exit point, we may well look to exit all or half our position there. We do take some bearishness from the MACD. It's still moving significantly lower, but we see that stochastic has gained a bit of strength, and that worries us a bit. What do we do next day? It's dropped an absolute substantial amount. Great news for us. We're delighted if we got out half our position there because we were a bit tentative. Fine, no worries, at least we're still in half the position. There are no strict rules about this. It really is discretionary and sentiment based, and the reason we got worried about that was because it was starting to make a 3 or 4 day low, and for all we knew the next day it could have shot up. The only thing we had to suggest bearishness was the strength of this MACD falling, and that's why that price has gone even lower. We do notice the stochastic is rising sharply, however. The next day all of those losses have gone, and this is a point where some people, even if they hadn't got out here, they might start to get out there, unless you're particularly risk loving. And let's say, for argument's sake in this case, I am, because I'm particularly bearish. I'm focused on the MACD, which is my #1 indicator, and I see, okay, I want to try and set perhaps a stop loss at most at about 47 pence, because that's the support on the Bollinger, rather than get out just because I see that happening. So what happens? Go forward, nothing much that day. Again, not much movement, starting to move sideways. But I'm looking at the MACD, it's starting to get a bit overbought. The stochastic starting to get a bit overbought. What I might be anticipating here is, given the downward strength of the MACD, is this going to start turning lower again and start resuming the share price even lower? Hasn't done it. MACD's gone flatter, this has gone higher. Probably look again to get out around this level. What's happened? Where has it left us? Well, we've had a week where you could argue we could have got out there at 50, equally could have got out here nevertheless. My point is, it's not about, oh, you definitely get out here. This is what happens. Sometimes you end up having to wait a week. You still get out at the position you would have liked to. You would have loved to have got out here. The only hint we had about getting out there or easing a bit of the position was that what I mentioned earlier on, that was a support level. Might not have been much use to us. The point is, those 3 pence we didn't capture, that always happens. Happens in every trade.